Here's what's coming up on Beacon Retirement Strategies.
As you're working, you're getting a paycheck every 2 weeks or however often you get paid. You want to take more risk because you're accumulating for the future. But when you stop working or you get into what we call the Retirement RedZone, which is really the 5 to 8 years leading into retirement, you want to start to move more from accumulation to conservation.
We're blessed to have a team of people in the Beacon family that can help with all those things: Social Security, Medicare, healthcare, estate planning, tax planning, income, investments, all of those things. We all know we need them all.
So what is the difference between standard typical diversification and asset class diversification? Well, asset class diversification believes that there are buckets of money with different objectives for you and your family.
And now the hosts of Beacon Retirement Strategies, Pete Benson and John Maxson.
Hey guys, super excited for this week's show.
Yes, we have 30 minutes of power-packed information just for you.
So don't go anywhere. The show starts right now.
Hi, and welcome to this week's Roundtable. Guys, we got a great topic. It's one of the things that I love talking about your firm, and it's the Beacon Retirement Blueprint and all the pillars in there. So, John, I'm going to begin with you. Why is it important for people to know what the Beacon Retirement Blueprint is? Comprehensive wealth planning.
Well, because today financial planning is not a transaction. And a lot of financial advisory firms are transaction-based. They're going to help you with your money and your investments, but it's not really a written plan. But when you get into retirement or close to retirement, it's about having a full plan. It includes certainly investments. That's one of the 5 pillars in the Beacon blueprints, is that we want to have a written income plan. But it doesn't just stop there. It's also a written investment plan. I want to know where my investments are, what type of income they're supposed to be producing for me. And then we want to go beyond that, and we want to have a tax plan. The reality is that taxes today are very underutilized in most retirement plans in terms of paying less in taxes throughout retirement. You can have huge influence on your retirement plan and taxes. And then we want to talk about healthcare. You know, healthcare and healthcare needs for retirees are going to be huge as people are living longer. And then finally, the plan ends with what we call legacy planning or estate planning, and we do all of that under the roof of Beacon Capital in one place, one location, which is really convenient for our clients.
So, Pete, it's really modern, holistic planning. All of the areas that are of concern for a senior, it's all under one roof.
Well, and we use the analogy of building your financial house. You don't just need a foundation. You don't just need walls. You don't just need doors or a roof or windows. You need all those things. And so the good thing is folks and families can come into our office and they can work with a team of specialists that some are good at, helping with the windows and doors. Someone else is great with the foundation. Others are putting the roof on and protecting everything inside the house. And they don't have to go to like 5 or 10 different places to get all those things. Everyone needs them. Your house isn't complete until every one of those aspects are covered. And so we love the fact that people can come here. And you don't build a house without a blueprint. You need the blueprint. And then you need builders that, again, are specialists in each of those areas to get you there. It's not one person who pours the foundation, does the doors and windows, the walls, the roof, the whole thing. He has a team of people. We're blessed to have a team of people in the Beacon family that can help with all those things: Social Security, Medicare, healthcare, estate planning, tax planning, income, investments, all of those things. We all know we need them all, but where do you go for a coordinated plan?
So one of the things I love, and one of the things we talk about, is how much your clients love this, how convenient it is, and how efficient it is that I just need to stop over at Beacon and I can have all of these things done. So I want to take a minute and I want you to talk about, John, what your clients say about it.
Yeah. Well, they love the convenience of it. They love the synergy of it. All people that walk in our office, for the most part, recognize the need to not just have an investment plan. They want to have a tax plan. They want to make sure they have a health care plan, and they want to make sure they have a legacy plan, that everything they have is controllable by them up until the day that they pass. But when they do pass away, that whatever assets are left flow to the people, the organizations, and the folks that they want to have that without the IRS taking more than what they're supposed to take. And so that takes time, and it takes a team of people. However, to our knowledge, we're the only firm in Nashville that has an estate attorney on our team, has a CPA and a healthcare individual. We can do all that internally. So even though people recognize that they need these things, chances are they're driving all over Nashville or Middle Tennessee trying to find all these different entities, and then they're trying to communicate a consistent message, and it gets confusing and people get discouraged, and then ultimately a lot of times they just don't get it done. So they love the fact that they can come to Beacon and we can put all of those individuals around one conference room table with a consistent message.
Yeah, it's this comprehensive wealth planning that's genuinely under one roof, because there are other folks that have affiliations, right? Sure. But they're not under that roof. You still got to drive all over and do this. Hey, I got 30 seconds left, Pete. What if I already have one of those folks in my life? What if I already like my attorney? What if I already like my CPA? Can I bring them into the mix?
Absolutely, and that's great. I mean, most people do have some of those things. You don't have to fire those people or get rid of them. If you're comfortable and they know your situation, great. But most people don't have all the players on the team. So we will complement what good things they already have planned by filling the gaps of the things that they don't have. And over time, sometimes people say, well, this person has been good for me, but it just still makes sense for me to have the people at Beacon take care of those things. So it's whatever families want, we're willing to work with them.
Pete, John, thanks so much. Hey, if you want more information about comprehensive wealth planning, pick up the phone right now. Give us a call in the office. We'd love to start a conversation. Or go to our website. And don't go anywhere. We'll be right back.
You're watching Beacon Retirement Strategies, Nashville's retirement television.
You know, John, one of the things I love hearing around our office from clients is that they love the full service, comprehensive approach that we have.
Well, it's been a game changer for our clients and for prospective clients, because they can come to one place and meet with all these guys.
Yeah, I've found that clients find a lot of value in the estate planning area, having the opportunity to meet with a tax professional or a financial professional all in the same room most of the time. It allows us to set up a more thorough plan for them.
And they have a lot of questions about health care and that too, Dan.
Now that we have Frankie in the office doing health care, he can do Medicare, he can do standalone plans if you want to retire before the age of 65. That's complicated. Yep. There's some great plans out there. A lot of people don't know there are because it's too complicated. Now we have one person in-house that can really research all of those, who's fully independent.
You know, the number one thing I'm asked when people come in is, what is a tax-efficient planning strategy? And what I talk to them about is, how do you get some tax-free assets, whether it's Roth conversions, Roth IRAs, other ways of getting tax-free assets. What we're trying to do is make sure that people are able to keep more of their hard-earned money.
How would you like the opportunity of being able to sit around a table in one office and be able to have help all in a good comprehensive plan for taxes, healthcare, income, estate planning, investments, and all of that? Well, guess what? You can at Beacon Capital Management. Give us a call. We'd love to be able to meet you and help you in any way that we could. 615-436-6000. Give us a call. All of us would love the opportunity to be able to help you and your family.
You're watching Beacon Retirement Strategies, Nashville's retirement television.
Today we're going to talk about asset class diversification. You know, one of the most basic questions that we're commonly asked in our practice is, should I be diversified, and what does that mean to me and my family? You know, diversification has changed like many things have changed in life, and typically when someone talks about diversification, they're talking about diversification kind of in a standard old way, where it's just regarding your market money. Having some money that's kind of all over the place in mutual funds or stocks, whether that's small cap, mid cap, large cap, international, maybe some bond funds. That's their definition of diversification. And the truth is you need that. But we believe that diversification is much bigger than that in today's financial planning circles, and that your plan should encompass what we call asset class diversification. And so what is the difference between standard typical diversification and asset class diversification? Well, asset class diversification believes that there are buckets of money with different objectives for you and your family. So what we want to cover today is what we believe those buckets of money are and what they should be for you and your family. So the first bucket is what we call your growth bucket, or your managed growth money. And this is your market money. These are things like stocks and mutual funds and ETFs and bond funds. Things that are important that we believe there should be diversity inside of that. But this bucket of money is going to concentrate on higher growth and lower yield or lower dividend. Now, we believe this bucket should be managed. The volatility of this should be managed. You can never promise performance. And we think it's important that you have this bucket for an inflation hedge, because people are living longer. And the bottom line is, if you live 25 and 30 years into retirement, you want to make sure that you have a well-diversified growth bucket of market money that's going to give you an inflation hedge that's going to continue to allow you and your family to support your standard of living, your lifestyle, no matter how long that you may live. Unfortunately, in our opinion, that's where most financial advisors stop. They just talk about diversification within your managed growth pocket. We want to expand that a little bit, and we want to talk about this middle pocket and then the far pocket over here to the right. Well, the middle pocket is a securities pocket, but it's a pocket that we refer to as focused income. When you retire, it's all about income. Growth is great, but not sacrificing income, the income that you're going to need to support your lifestyle. And this is, in our opinion, what a lot of advisors vastly underutilize. It's all about the next big stock that's going to be Apple or Netflix or something like that. But income in retirement is crucial. And so we want to have a diversified focused income pocket. And here, our focus is making sure we're getting high dividends or income or yield, that regardless of whether your portfolio goes up or down, this is income that you're going to be able to use to sustain your lifestyle. Now, there could be some growth, but it's going to be low growth. And this is going to be more of a fixed income bucket. And we're going to utilize things like bonds or interval funds and things called structured notes or bank notes. So again, lower growth, but high yield or high income, because of course it's all about income and retirement. And then finally, we think it is vital that every person that is close to retirement or in retirement have a bucket of money that is principal protected, but getting a reasonable rate of return. Now, is that possible? Well, absolutely, that's possible. A lot of times we're asked, well, banks are paying a little bit more today than they were a few years ago, but it's still well below the standard rate of inflation. If you go to a bank, you can do a certificate of deposit, and you're probably going to get 1%, maybe 1.5% if you're fortunate enough on average in America today. And that's not a return that's really going to keep up with inflation. You can do other things though, like government treasuries or fixed annuities, which have a declared rate of return of probably right now somewhere around 3 to 3.5%. And then what's called a hybrid or a fixed index annuity. These are investments, and there are many more that are going to allow you to have some money protected, but also get a reasonable rate of return. And we believe that a true balance and diversification of each one of these buckets that focuses on growth, yield, and protection is going to really get you to where you want to be, not just today, but through retirement. If you want any information about any of these topics that we've talked about today, call our office or go to our website.
In this week's tax tip, I want to talk about the impact of the Secure Act. The Secure Act became effective on January 1st, 2020. Here are some of the key provisions. The RMD age was raised from 70.5 to 72, which means IRA owners reaching 70.5 in 2020 or later will not have to take RMDs until age 72. The Lifetime Stretch IRA, which allowed beneficiaries to stretch their RMDs over their remaining lifetime, is replaced with a 10-year rule, such that the beneficiary has to take all of their RMDs by December 31st of the 10th year following the year of death. A new exception to the 10% early distribution penalty was also created for qualified birth or adoption distributions. The provisions of this new law could dramatically impact your retirement savings and have significant tax implications on your beneficiaries. If you'd like to meet with a financial advisor and myself, to discuss the most tax-efficient plan to address the Secure Act, please give us a call. That's your tax tip of the week.
You're watching Beacon Retirement Strategies, Nashville's retirement television.
Having no clear retirement plan is a mistake I see a lot in my financial planning office when I meet with someone new. It is extremely rare that someone comes in and has a clearly defined income plan for his or her retirement. One way you'll be able to get a clearly defined income plan is to talk to an independent financial advisor who specializes in retirement planning. Not someone who is specialized in getting you to retirement, but someone who is dedicated to getting you through retirement. If you don't have a clear retirement plan, then be one of the first 5 callers and you will receive a free complimentary planning review. There's no obligation, no cost if you have at least $200,000 saved for retirement. Here's what you'll receive: a free report to sort through your current fees, a tailored plan to help protect your investments, a tax analysis to reduce your tax liability and increase your cash flow to your family, and a custom income plan to support your lifestyle. So call now for your free, no obligation Beacon Retirement Blueprint.
Hi, I'm John Maxon, and I would like to share a copy of our new book called Succeeding with Money, A Financial Plan for Life. This book is available on Amazon, but if you'd like a free copy and you've saved a minimum of $200,000 for retirement, then be one of the first 5 callers right now to call in and schedule a complimentary consultation. You will receive a free signed first edition of our new book, Succeeding with Money, A Financial Plan for Life. These books will go quickly, so call us right now. I look forward to seeing you in the office, and remember, peace of mind in retirement requires a plan.
You're watching Beacon Retirement Strategies, Nashville's retirement television.
Hi, and welcome to this week's Retirement True or False. Gentlemen, I've got some great questions. John, I'm going to begin with you. Most retirees are using the same strategy they used in the accumulation stage of their retirement as in the distribution stage of their retirement. True or false?
Well, unfortunately, that's true in many cases. They don't make that switch from accumulation to conservation and income, and that is typically where they're going to take way too much risk. And let me tell you, the difference is, as you're working, you're getting a paycheck every 2 weeks or however often you get paid. You want to take more risk because you're accumulating for the future. But when you stop working, or you get into what we call the Retirement RedZone, which is really the 5 to 8 years leading into retirement, you want to start to move more from accumulation to conservation and income, because when you do retire, those paychecks are going to stop. And outside of Social Security, and for some people, very few that have a pension, all of your income, or a significant portion of that, is going to have to come from your investments and the income that they produce. And what you don't want to do is leave yourself in a position where you're vulnerable with too much risk, in particular at the high of the market.
You know, is it a fair statement, Pete, that this is the way some advisors do it? They don't change your strategy. They know one way to do it, and I'm not saying it's wrong and I'm not saying it's right, but that's the only way they know.
A lot of advisors do, and it's funny because it's the investors, the client, who actually, come to their senses and realize that something doesn't seem right here. It doesn't seem right that I should do the same in my accumulation as distribution. So when they come to our office, a lot of times they come, and the reason and what motivated them is it just doesn't seem to sit right with them, because these are two extreme changes. They know it as the client. We need to know it as the advisor, surely, that these are two different periods of life. And what's hard is when something has worked for 40 years of your life and you've done it over and over and over, it is hard to shift. I will give you that. But when you realize that it's a totally different stage of life, you have to change.
So, I kind of look at it like this. What you did in your 30s, I don't care what aspect of your life it is, you do something different now in your 60s or late 50s or 70s. You should not be doing the same thing. So there is that gut instinct that perhaps something should change here. Fair statement?
Yes, fair statement.
Pete, my next question is for you. All the information you'll ever need about how to take your Social Security, you can get at the local Social Security office. True or false?
Well, unfortunately, that's false. I mean, there's good people who work there and they want to be helpful, but they're not trained, or it really even isn't their position to just help you maximize your Social Security. They are to answer questions for you and get it right, and hopefully they do, and I think they do a lot of the times. But they're not financial advisors who really look at the big picture and show you all the things that have to do with your entire nest egg. And Social Security is just one big area, but important area of that, working in harmony with everything else. They are not trained for that. So you need to go to someone who is willing to look at Social Security under the lens and around everything that you have. We're willing to do that. We do it with families every single day at one of our offices. But the Social Security office does have a purpose, and they do answer some questions for people, but they're not financial planners.
So you just reminded me of a funny story. My wife and I'm 52 years old, went onto Google and put in, when should I take my Social Security? And if I'm not mistaken, there were over 18 million possible places that we could go and click on to get information.
No doubt.
Googling that, I imagine with any part of your financial advice, not necessarily a great way to go. You should see an advisor.
Absolutely. I mean, you know, Google has its place, but for making important decisions like that once you make them, there's no turning back. It's too important. You need to go to a specialist, a professional who does this every day with families and get a custom planned decision about your Social Security, not just what something on the internet says.
Pete, John, thanks so much. If you want more information about what we spoke about here today, hey, give us a call in the office. Let's start a conversation, or go to our website. And don't go anywhere. We'll be right back.
Welcome to this week's Master's Money Moment. This week we're going to talk about the importance of protecting your assets. You know, the world seems like it's a crazy place. A lot of times people will come and ask us about different things that are happening in the United States and around the world, and they're really fearful. Well, first and foremost, we do want to be prudent, but we don't want to live our lives in fear. We should never make decisions along those lines. The Bible actually has something to say about protecting your assets as well. Proverbs 27:12 says this: "The prudent sees danger and seeks refuge." So we do want to be prudent in a world that can sometimes be out of control. That's something that we talk to people about, but we don't want to make decisions out of fear. We want to be prudent. We want to understand what's happening to the best of our ability, and then we want to make decisions that are based on things that we know, not things that we fear. And that's this week's Master's Money Moment.
You're watching Beacon Retirement Strategies, Nashville's retirement television.
Having no clear retirement plan is a mistake I see a lot in my financial planning office when I meet with someone new. It is extremely rare that someone comes in and has a clearly defined income plan for his or her retirement. One way you'll be able to get a clearly defined retirement income plan is to talk to an independent advisor who specializes in retirement planning. Not someone who is specialized in getting you to retirement, but someone who is dedicated to getting you through retirement. If you don't have a clear retirement plan, then be one of the first 5 callers and you'll receive a free complete planning review. There's no obligation and no cost if you have at least $200,000 saved for retirement. Here's what you'll receive: a free report to sort through your current fees, a tailored plan to help protect your investments, a tax analysis to reduce your tax liability and increase cash flow to you and your family, and a custom income plan to support your lifestyle. So call now for your free, no obligation Beacon Retirement Blueprint.
This week we're going to be talking about estate planning in light of changes in the federal state tax exemption. The federal state tax exemption as of January 1st, 2020 is $11,580,000. This exemption is scheduled to be reduced by half in 2026. However, we are in an election year and historically the tax changes depending on who's in office. Responsible planning may be structured to reduce your taxable estate, save income taxes, and protect your assets from creditors in a way that permits you to continue to have access to those assets. Also, if you have a trust that's even 5 years old, you may need a more up-to-date trust drafted. Flexibility is key because the world keeps changing, as does the stock market and tax laws. Trusts that were set up more than a few years ago are unlikely to provide the terms that up-to-date trusts provide. If this may be you, you'll want to reach out to an estate planning attorney in your area to make sure your estate plan is drafted to match today's tax environment. And that's your estate planning tip of the week.
You're watching Beacon Retirement Strategies, Nashville's retirement television.
Are you worried that your financial strategy is missing something? Today's retirees and pre-retirees will need to utilize the services of a qualified legal and tax team, as well as a financial advisory firm. The professionals at Beacon Capital Management, Beacon Accounting and Tax Services, and Knight Legal are committed to being your comprehensive wealth and retirement planning solution. And here's the best part. All of these services are under one roof. That's right, let Beacon Capital Management effectively coordinate all of your retirement, legal, and tax planning needs. Our unique combination of licenses, registrations, and specialized education qualify us to work with a wide variety of investments. We can create a solution for virtually every retirement scenario, no matter how simple or complex. Call us today and experience the Beacon difference. Imagine all of your investment, tax, and estate planning questions being addressed around a single table. Call now for a complimentary retirement analysis. There's no cost and there's no obligation as long as you have saved at least $200,000 for retirement. Call us now, and remember, at Beacon Capital Management, peace of mind in retirement requires a plan.
Having no clear retirement plan is a mistake I see a lot in my financial planning office when I meet with someone new. It is extremely rare that someone comes in and has a clearly defined income plan for his or her retirement. One way you'll be able to get a clearly defined income plan is to talk to an independent financial advisor who specializes in retirement planning. Not someone who is specialized in getting you to retirement, but someone who is dedicated to getting you through retirement. If you don't have a clear retirement plan, then be one of the first 5 callers and you will receive a free complimentary planning review. There's no obligation, no cost if you have at least $200,000 saved for retirement. Here's what you'll receive: a free report to sort through your current fees, a tailored plan to help protect your investments, a tax analysis to reduce your tax liability and increase your cash flow to your family, and a custom income plan to support your lifestyle. So call now for your free, no obligation Beacon Retirement Blueprint.
You're watching Beacon Retirement Strategies, Nashville's retirement television.
It's a great show this week. Hey, thanks for tuning in.
Yeah, and if you want to contact us, give us a call at the office or go to our website.
And remember this, peace of mind in retirement requires a plan.